Good morning, everyone. So today we are going to examine a typical day of price action here using Cypher SR with a little bit of help from Cipher B as well. So I'm waking up here, I got my coffee, it's raining outside, it's a nice day, and you're sitting here at the charts, and in fact I'll get rid of everything here except my VWAP line. So the VWAP, the volume weighted average price, it's just a moving average line, but every day at the start of the new daily candle, this white line will jump to the price action in favor of where the volume is going. If you look back here, you'll see little jumps every time the day turns. So you see the 7th down here, it jumped a bit. The 6th was back here, and it jumped from down here to up there. So every day, every at the start of every day, this thing's going to jump, and that has the effect of basically giving the other side a chance to take control of the market. So if this line jumps to the price, and then all of a sudden you see price gaining traction over VWAP, you know that you might have a bullish day. Whereas if the new daily VWAP reset occurs and the candles slip below and start treating VWAP as resistance, such as right back here, you can count on brokers and bots shorting at that line for either the whole day or a brief while. You never know. But right here you can see that it was being shorted for a little bit, and then once we got the support, do you see this tap of support here? This was important. That's kind of where you would take a long using this indicator, is when the price comes over, breaches like a whale, and then the splash. It's the splash moment where the whale breaches the water and then flops. That's when you take the long, because that's when you see the confirmation of support, and it's usually when you get the bigger move. So there's no promises that this is going to keep going up. But now that we're over the VWAP line, this is actually going to be support now, and it's also going to be a fair price to enter. So that's the way I like to use VWAP, as a fair pricing tool. So you're using this white line to either enter long in an uptrend when price is trending over VWAP, or in the case of right here, you'd be using it you would be shorting at the VWAP, applying a shorter strategy there to take advantage of a brief downward trend here. I think Bitcoin's been kind of trending up, so these periods where the price is trending below VWAP, it might be kind of a warning to you that you don't want to be entering long in this kind of bull market that we're in. At these times, you want to be entering once we're starting to find support on the VWAP. That way you can catch these bigger moves faster. You're in these trades for less time, and it's less stressful when you just wait for that whale splash confirmation of support on the VWAP. If you're a pro, you can catch these bottoming patterns, and they do say that the best longs are below VWAP. But waiting for that confirmation of support is going to be safer, especially for a new trader. So yeah, when I look at this current day of price action, we got the jump last night when the new daily candle formed, and unfortunately the bears came down and basically shorted this thing. But recently, in the last few hours here, we're seeing price confirm a support, and now we're over VWAP. So this is probably going to be a bull day. So that doesn't mean long right now. It actually means that you should wait for the price to come back down to VWAP and then long at that level. So you can even set limit orders, save yourself on the market fees, and trade like that. Just constantly long at VWAP if we're trending over. Just another example. So here was another day where we had our jump here, and the bears certainly did make an attempt to push the price below the volume weighted average price, but we quickly found support back on top. You can see that we made our way back on top, and we had these nice long scalps. You can see that every time the price held firm, there was a nice little long scalp surge. I would say that we had 1, 2, 3 scalp surges in this 2-day period here. And then, we fell down below. There was a little bit of a skip here. Let's see here. Oh yeah, here was the CME gap, large CME gap. It's hard to see with the VWAP here, but you can see that over the weekend, the futures chart didn't even trade. They don't have data for that time period. So it is funny how the price maybe pumped up a little bit, but no, we're coming back. We're testing that. That was an uncontested price range. The futures people, the futures guys, they're definitely going to be testing these levels. So price was dumped, and I guess we could see, did the VWAP predict that price dump? Okay, so we look at this white line here. It jumped, and it looks like, yes, we fell below the VWAP, which was your first warning sign. If we're using the whale metaphor, the whale splash metaphor, this was the breach, and you did kind of have a little bit of a splash there, but no, this was definitely the splash right here, and you did have that window once we fell below VWAP to flip the short boosters on. But in an up market like this, it's not always about catching every short. As long as you know when not to trade, you'll save yourself a lot of trouble. And for me, I don't enter a long unless we are finding support on top of VWAP, so this did not get me here. And I didn't even see many people in our Discord that got by this wick. So we dumped far below VWAP, had a really nice pump back up, and it looks like we were just testing levels inside this gap, the CME gap. And we were testing this gap as resistance somewhat. And then, so here is basically the bull attempt to regain traction in the market. There was definitely a futures, I'd say that was certainly a futures dump. We filled a huge futures gap there, tested some deeper levels down here. We did have a gap back here. This green box was a gap, but we filled that one already. But there is a gap way down here that was only kind of a partial fill. So, we could come down to 8,500 and fill that gap. But we'll see. So the bulls are going to make an attempt here. We're over the VWAP. We're going to be looking for long scalp opportunities at the VWAP and taking profit, and we'll basically await the new daily candle reset, which will be over here when the 12th begins here. So we got a bit of time to wait. We're going to look for long scalps at that white line, and that's basically how I would trade with the VWAP. So that would be that white line there. There's also some other indicators on Cypher SR. So you have your pivot high and low, which is going to be this blue matrix that encapsulates the price action here. I like the pivots because they're so simple. So one thing about them is they reset every day. So at that same time that the VWAP is resetting, the pivots are also resetting. So they're both intraday indicators, day trading indicators. Basically, it gives you this daily trading, a day trader's mindset. You're kind of more patient for trades. You know that there's going to be opportunities tomorrow. You're going to be seeing patterns over the course of a few days or weeks, such as like this step up pattern that we saw back here. When you start isolating a step up pattern, that's an uptrend. You got higher daily highs, higher daily lows. Let's say you're in an uptrend like this. It makes sense that the lowest part of the day would have been the best time to long. So you're looking for a daily low, a daily pivot low to enter a long at. And so you see, price coming down. And if your other indicators, such as your oscillators or anything, are indicating that this is a bottom, or such as this gap fill that we filled right here, if there's any kind of indication that this is a bottom at this daily low, that's gonna be your indication to take that trade. Same with right here. If you were to look at the oscillators, we most likely looked very bottomed when we are right here. I'm not going to pull up Cipher B yet, but basically this gets you into the mode of looking for the daily lows in uptrends, and then the opposite scenario is looking for the daily highs in downtrends. So, this was a stair-step down pattern. You can see that it wasn't perfect. It's not going to be perfect all the time. When it is perfect, you want to increase your trading frequency, but either way, you're looking for these high points, the daily highs, in a downtrend to short from. And so when you pair this dude with the VWAP, it's going to be super powerful. You can see that if we touch a pivot high, create a new daily high, we don't exceed previous daily highs, so the downtrend is still intact, and we start rejecting off that VWAP. You can see that the bears made a splashdown here. They flopped on the VWAP, rejected. That's when you're turning on a short strategy. You can see that if you would have just put limit short orders at this white line, this downtrend would have been a pretty low stress, a very low stress shorter. So it's getting you into the mode of which way the market's going. And then over here, you see price begin to trend over the VWAP. Find support, even has like a future skip here, right at this daily candle formation. And every time it comes below, we're bottoming and we're creating the daily low, and then we quickly find new support. So the VWAP pivots working together to get you trading the right way in uptrends and downtrends. And you can use these with any time frame under the hourly. I say under the hourly because when you're scalping, you need to see the smaller time frames, but these indicators are gonna get kind of blurrier the more you zoom out. So like on the 5-minute here, you can see the VWAP and the pivots still look the same. They're longer. They're like control variables. They never change because a daily range is always going to be a daily range. So that's another reason why I like these guys, is they look the same on all time frames. For instance, if I were to go to the 12-hour, these indicators become untradeable. You can see like the daily range, there's only 2 candles in a daily range there, so it's hard to interpret that. And your VWAP is just so close to the candles that it's hard to interpret that as well. So these indicators were certainly made for the hourly and below. So you can see the hourly here, and if you go to the 30-minute, basically you can zoom in as hard as you want. But you can see price finding support there. Very nice support formed on your VWAP. That's where you would start entering your long scalp. And you take profit. And since it's a limit order, you're saving those entry fees. You're not getting eaten by piranhas with the 0.075% fee. And that's off your total position. So, if you're on 100x leverage, that's 7.5% of your principal there, just going straight to fees. So if you limit in, you're going to save some money, and the VWAP's going to help you limit in. And then you just make sure you take profit. So there is one more component of Cypher SR here, which is the Cypher support and resistance. So these are our dots here. The purple and yellow dots here. And they're default tuned for the hourly chart. So we'll pull up the hourly chart here. And if you're on a different time chart, then you can go into your Cypher inputs here, Cypher SR resolution, and you can change this resolution to 1/4 to 1/5 of whatever the time frame you're using, and it'll give you a quote more accurate propagation of the dots. But the hourly support and resistance here works on all the time frames on the hourly and below, so I usually don't change the default resolution. But every candle that prints is just going to confirm a given level as support or resistance. So you can see that, all these candles confirmed this yellow region as support, and then you can see down here that this was a strong level of support that was formed. So it's just going to help you with more horizontals. You got your daily pivots that we just went over. These are going to add more horizontals. And you could even actually apply a trading strategy to these. If you see support being formed, you're long. If you see resistance being formed, you're short. So you can actually solely trade off of the dots. For me, I use them as places to put your stop losses behind, places to put your orders at, etc. There's one more horizontal level that I want to go over, and that is the center of range. So the center of range is just your daily pivots, the midpoint of the daily pivot. So it's this orange line here. Whatever the daily high was and the daily low was, this orange line is just going to be the midline there. I don't necessarily put orders there, but it is interesting to see how once the daily high and low are established, the price tends to come to the midpoint and consolidate around that level. So that's usually where you're gonna get your triangle formation or like rectangle or sideways action around. So the midline can be a very powerful level. Just another horizontal to add to your repertoire. We did have to remove the profit calculator functionality from Cipher just to keep Cypher SR more focused on these intraday indicators and horizontal levels, because we really wanted to teach people and hone in on the scalping method, which I feel like is most powerful when you use Cypher SR. I would definitely use standard candles only when it comes to Cypher SR. If you turn on the Heiken Ashi, which are great for swing trades in Cypher A and Cypher B, but on when you're scalping on the hourly and below, candle highs and lows are going to be skewed here, so your daily ranges aren't going to be accurate. I'm someone who likes accurate data, so rather than using the Heiken Ashi, which starts every candle at the midpoint of the previous candle, I would rather use standard candles. That way your daily ranges, your highs and lows, are as accurate as can be. So I mentioned earlier in the video that you can use VWAP and the pivots as a control variable. So what I mean is you can pull up two time frames like you see here. On the left you have the 3 minute, on the right you have the 15. And the only difference between the VWAP and pivots over here, basically the only difference between these two charts is there's 5 times as many candles on this chart. But otherwise, the pivots and the VWAP look the same. So we can use that to compare waves more effectively. So when you see a point, such as like up here, you see the price like rejecting off the VWAP, and I love this. I love TradingView because you can see it drew over here where that was on this chart, and I can do that over here too. It'll draw on both charts for me, and very nifty. But you can see that we can draw where the waves were at that same time. So we were passing that overbought threshold, the plus 60 white line here in our market Cypher B. So we were sufficiently overbought there, rejecting off VWAP as a nice short. Then we came back up, another rejection off the VWAP, and a very nice overbought wave. And then over here, another rejection and overbought. So there was other overbought waves. You can see one here and here and here and here. But if you pair the VWAP rejection with the overbought wave, these shorts are going to be more refined. And then now we add this second time frame. So if we look at what's going on over here, you can see that, oh shoot, okay, so we were in an extended period of negative momentum here, and the trade wasn't as clear on the 15 minute. So on the 3 minute here, you would have caught on to this VWAP rejection. Over here, you didn't get that extra signal of the overbought wave. So this is where the two time frames can come in handy with each other. So the next one here, we were overbought on the left. On the right, we were also overbought. that's pretty close. I'll count that one. A red clipping like that. So if you're overbought on both time frames after already rejecting once off the VWAP, that's an extra good short indication. So that was a banger right there. And finally, you have this third opportunity here where okay, I'll give you this. We do not have an overbought wave, but let's just zoom into the 15-minute here. I have taught you guys in my previous video the divergence boot camp that if you have higher price action going up, but momentum going down, that is bearish divergence. And so you had a clear bearish divergence with a rejection off VWAP. And so sure, we were not overbought, but that was a nice divergent wave in price action. Nice little catch there, and got you into this kind of second day of micro shorts here, little short scalps. But as you can see right now, we are now finding traction over VWAP on the Bitfinex chart. So that's basically how you would approach using multiple time frames with the waves, using the VWAP and the pivot high and low as a control. So if you've been in the CryptoFace community, you may have noticed that I have come back from a bit of a hiatus. I was gone for 1 month. I was cashed out, worried about taxes. The market was extra pessimistic. It was Christmas and my birthday. And one thing led to another, and I just kind of decided to take a small crypto break. So I was still answering emails for you guys, talking to you guys, even consulted a few dudes. But I took a break from the analysis and from trading for about a month and a half. I appreciate you guys still staying faithful, and I'm definitely back here. And it's been a great trading window. We were able to catch some epic moments in the market, such as when we isolated the CME gap here, and then that very night on the stream, we had the target fill right there. So that was real nice, and we took the long in the CryptoFace community. This day, we were taking a look at Cypher SR's VWAP to analyze the last few days of sideways action. We were sideways. Look how sideways that shit looked. But still, we were able to isolate when the VWAP was acting as resistance and when it was acting as support. And you can see that even in the sideways market, once you get that whale flop as support right there, you can count on that extra upward move. So it's not always a big, huge pump, but that's one reason to take profits. So, in a sideways market like this, sure, you're not getting these huge targets, but you're also, your trading frequency could go up if you're able to slice and dice this market both ways. So that was a cool day of analysis there. This right here, this was another day where the price was below VWAP, came up slowly, giving us plenty of time to enter before that bigger upward surge. So it's been a really nice uptrending market. Right here, we were able to isolate, I believe this was the 5-minute chart. We were able to isolate the oversold waves that we love to see for long opportunities, and we paired those up with support taps on VWAP for long scalps. Good plays there. So this was kind of a turning point. So, after a few days of VWAP acting as support, we're starting to see VWAP as resistance. You see we fell down below the white line there. So, once this falls down below that white line, it might not be time to long yet. We need to wait for that to come over, confirm it as support before you enter. So, there was the first warning sign there. Here we go. Once we did dump, we dumped off that last analysis. And then it was kind of like the rebound. So you can see the price was far below VWAP. We surged up, nice tap as support right there before continuing up. Even a nice support wick there. And then finally, yesterday, price was creating higher highs momentum was getting weaker, and you can see that the daily candle formed gave the bears a chance to bring the price below VWAP. So you can see that this was when I posted my first sign of suspicion. And of course, this was the end result of that. We slipped, we did not come back over the VWAP, and we had a good 1 to 2 confirms as resistance before the capitulation, or not a capitulation, more just a CME futures gap fill. So saved a couple people there. Shout out to my boys in the Discord. I got a nice little loyal following in there, and super positive. Anyone can join the CryptoFace Discord, and I do consultations. Just reach out to me at shittokens@gmail.com, and it's good to be back, guys. Thank you. Bye-bye.